Opendoor, the biggest turnaround company, going to 82. And this is even conservative. This is something that Eric Jackson, the huge hedge fund guy behind Open, actually just said on Twitter. Let's dive in.
Welcome to the game, I'm the wolf of Dubai.
Welcome to a brand new video. If you don't know who I am, my name is Danny and I'm looking for stocks that we can be early on, okay? I was early on Tesla, Robinhood, Nvidia, and Palantir, and my subscribers bought even houses and apartments because they followed my free content here on YouTube. So I'm more than 8 years now on YouTube, all for free, every day vlogs that are life-changing, okay? That tells you about news, about breaking situation, about opportunities, about my trading, and so on and so forth. So if this is interesting, then you should be subscribed to all of my YouTube channels, my X account, and my partner Michele, who is on X10 Stocks. Michele X10 Stocks, you will find his both channels. He talks about in his YouTube show about HIMS, and HIMS is about to go nuts, okay? Because they are up 40%. And if you would follow him already, you would be already 30% or 45% positive. So maybe it's worth to subscribe to all of our channels. And also, we haven't lost a trade in our X10 day trading group since March, okay? We are having winner after winner after winner after winner. And this is all done for you. With our software, we copy the trades from our professional day trading team directly into your portfolio. We watch the whole market for 8, 10, 12 hours, and then we close the trades also. We don't have overnight trades. We don't have average down. We use only 5% of your portfolio every single trade. So with that small portion of your account, we can achieve between 8 to 15%. So if you start with $10,000, you should be somewhere around like 58 after the first year. If this is interesting for you, schedule a call. It's just 50 minutes and we will see if we can help you as well. Now, let's dive into the tweet of Eric Jackson. If you don't know Eric Jackson, this is this guy here that actually goes out every single day in front of Drake's house and try to convince people to buy more Opendoor. Have a look.
Guys, it's day 200 and I am back in the bridle path where this whole series started. Had to come here for day 200, right in front of Drake's house. It's a rainy, foggy Saturday morning in Toronto, snow starting to melt. And you know what? When I started recording all these videos out here, Opendoor was trading around $3. Today, as of yesterday, it was around $5. At one point in September, hit almost $11. And then it's pulled back, basically cut in half ever since. A lot of people got frustrated. A lot of people stopped believing in Opendoor, stopped having the same excitement over it. The company's actually stronger today than it was when the stock was higher. And that happens more often than people realize. Price and progress rarely move in a straight line together. Carvana went through all of this. At one point in its comeback, the stock pulled back 63% from a recent high. I've told this story before, and everybody said the story was over, or they weren't even paying attention to it. But it wasn't the end of the story. It was just the middle of the story. It was actually closer to the beginning of the comeback story. Yesterday, my son, Julian, 17-year-old marketing manager, came back from a week-long trip to Japan. And he's the one who originally suggested the idea of me coming here in front of the payphone, in front of Drake's house. He also brought me back this hat from Hiroshima, the city where the first atomic bomb was dropped. So this is a symbol of their resilience and of their rebuilding of the city, coming back. And seeing him yesterday made me realize something very special. 200 days ago, when I started this whole journey with him, I had no idea that I would still be here 200 days later, on weekends, on holidays, recording these videos every morning. It's wild. Sometimes in life, you start down a path and you think you know where it's going to lead. I thought this would be over in 10 days, but the path keeps going and you don't actually find out where the destination is until you start walking on it. I still believe in Opendoor. I still believe in all the rising dynasty. companies that we've talked about here over these 200 days, I still believe we're going to find the next Carvana. I'm grateful to be walking this path with all of you in the Rising Dynasty community. There wasn't a Rising Dynasty community when this all started 200 days ago. We keep going. We keep getting up. We keep grinding. I'm here grinding with you every day. It's day 200. Let's keep it going.
So one of the tweets he started yesterday was, people think Open is an iBuyer. That's like thinking Carvana is just a car dealer. It's not. The car was never the business. Finance and insurance were. Today, Carvana gross profit per unit is $7,000. And 40% of that comes from financing. Now think about houses. Average home price is $365,000 and average car price is $25,000. Every financial attachment on a house generates $10 to $15 more than the same attachment to a car. Mortgage, titles, insurance, closing services, the home becomes the distribution channel, the financial stack becomes the business. Cash builds shop pay installments from zero to dominant in a year. Just launched the $499 mortgage on Open, same playbook. Meanwhile, the cost structure is collapsing. Headcount is down 40%. Rubber thinks that the platform can run with 200 people. AI does the underwriting, pricing, and workflow. That's operating leverage that Street isn't modeling. If Open reaches $20 billion in revenue and attaches financial products like Carvana did, gross profit will be $4 billion. At Carvana's current EV GP multiple, that implies roughly Open at $80 per share. And that assumes no premium for faster growth. The old debate was, does iBuying work? The better question now is, Opendoor quietly become a housing fintech platform? Because if that's the right framing, 82 might end up being the floor, not the target. People asking for open targets, end of 2026, 80 to 28, end of 2027, 80 to 110, end of 2028, 130 to $180 per share. I mean, like, that's crazy, right? Using forward EV GP, not EV revenue, the math works at a discount to Carvana current multiple. It works even better if you give Open a growth premium for 80% year over year. So you can see here, like, he is very convinced, the same way I am, that housing is just like the entry product, right? People need maybe services like a mortgage, or maybe they need services like, what about later on they can offer services around the house, right? So for example, maintenance or remodeling, or, all of these things that are there. But the most important part is the mortgage part, because at $499, that's a huge money in interest. Okay, a massive profit for interest income for Open that they didn't have, and at the same time they are reducing the cost. So it's like a rocket ship that is just about to fly tremendously. They built this product in less than 12 weeks, where other people said you need at least 2 or 3 years for that. They have the money, they know the property is better than a bank. So it's absolutely like a no-brainer. It's the same way Tesla actually said, okay, you know what? We can build better seats for our cars, or we can insure our cars much better than other insurance companies, right? It's about to take another stake of what is actually possible for the company. But there's one more tweet that I want to show you. 8 months ago, I said Open could go to $82 by 2028. Now I think that I have been too conservative. Not because the housing market got easier, because the operator changed. This is what I'm saying. It's a totally different game, totally different company when you have a super hard working CEO that is actually, crazy in love with the company, crazy about efficiency, AI, as well as profitability. That's the perfect way to go, okay? Since then, Opendoor's weekly acquisitions have gone from roughly 131 homes per week to 442 per week. You can track it yourself at, Opendoor. That's a 3.4x in 5 months. And this is all happening before the seasonal peak. That's the first thing. The second thing is headcount. Opendoor roughly 40% less people since Cass came in. So if Cass gets anywhere close to the kind of lean operation model that Keith Robace has talked about, Wall Street is nowhere near modeling the operating leverage. The third thing is the mortgage. This is the part where people don't get it. At Carvana, the car was never the whole business, the financing products. The same idea here, right? And then we go into the mortgage again, but Kes heard the same thing at Shopify when he built Shop Pay installment from zero to one of the largest installments products on the internet in a year. In a year, guys. He tweeted last week that he remembers all the people who were very confident it would not be done, okay? The old debate, whatever iBuying works, the better question is whether Opendoor is the quietly becoming a housing fintech platform. That's a very different multiple. My original 82 target used Bloomberg's financial year 2018 revenue consensus. Wall Street currently has a $4.2 billion for this financial year of 2026. The acquisition paces implies nearly double that. If the pace is real and if Kes Shopify playbook translates faster than expected, then the timeline might be pulled forward. And that's what I'm watching. And this has like 189,000 views, guys. So you can see here that it's very, very public what Opendoor is building. They are very accountable for their next steps. They're doing the next steps. It's like the perfect storm for the perfect turnaround company. So if you want to day trade with us, check out xndaytrading.com. There are always limited spaces before we raise our joining fee. And I see you obviously on the other side because the grass is greener always on the other side.